Good morning, it's Steve O'Hare from Signal Centre. Today is Monday, the 18th of October, and I'm presenting Trade of the Week on behalf of Hantec Markets. Please take some time to read the risk warning and disclaimer. Right, let's dive down into it. The trade of the week this week is Aussie dollar, New Zealand dollar. We're going to take a look at the weekly time frame and then drill down to the lower time frames to try and get some color on what's going on the technical side of things. So we've just reversed from a downward trend on the weekly chart. We can see since the end of March to the mid-September, we had this downward move, this impulsive move lower. And we corrected from here over a 3-week period. Last week, however, the candle we formed was a bearish dark cloud cover. That's a negative candle on the weekly chart. So price action is expected to move lower from here. On the daily chart, we can see that price action has moved lower. We can see how the momentum has stalled, and we're getting a MACD crossover also. We've corrected from this overbought condition, and we're sitting around the midpoint of the RSI. So that is pretty neutral. We've had 3 negative days, formed a hanging man candle, followed by 2 negative days, confirming the correction lower. This morning, we've got down to 104.50. The range is 104.50 to 104.88. We're sitting around about 104.79 at the moment. We're in the Ichimoku cloud, and you can see, as we've said, we've closed above it on the 11th and 12th of October and even the 13th, but since then we've seen the move stall and correct lower. The next level of support we've got, let's drill down to the 4-hour chart to highlight this even better. This is the next level of support. We'll draw it in now. We're down at 104.34. So we can see this impulsive move lower, the first leg, second wave correction. This is the third wave, expecting a potential 4th wave correction before the 5th and final wave. Where do we expect this to target? Let's draw in some Fibonacci levels here. This is the move higher. We've just bounced off the 50% Fibonacci retracement level. That's not one of the key ones we look at. 61.8 and 78.6 are expected correction levels. So plenty of room on the downside, and we look like, as I say, the engulfing candle on the 4-hour chart, which is formed between 2 o'clock and 6 o'clock UK time this morning, and we've got a little bit of an indecision since then from 6 o'clock. That candle stops at 10 o'clock. So really looking to fade into any rallies that we see in Aussie New Zealand dollar, but obviously being aware that this move could stall and keeping everything quite tight on this. The bearish momentum looks to be stalling, so as I say, expecting a further positive correction higher, but this should be short-lived on the week. Further downside from a weekly perspective. Thanks for joining me.